See, this is a good team.
Ladies and gentlemen, welcome back to Chart Talk 105. Is that correct?
I think so.
105 in the building. Let's get right into it. We got a feisty market on our hands, so let's jump right into the market outlook. And, you know, the SPY remains, S&P remains in this grind-up market, you know, this momentum market. We had some semblance of a pullback last week, and when the market gets this high, gets this overbought, if you will, it can get fueled to get higher because everyone's waiting for the pullback. So the market starts to pull back a little bit, shorts pile in because it has to pull back soon, and that can propel us to keep going higher. Don't get me wrong, this pattern will eventually break at some point, you know, but until then, we're seeing some great momentum in the market. We're seeing some really great moves in some of the earnings names. You know, that's really, I mean, it's really been that simple for me. Just riding out the trend, not overthinking it, not trying to like pull back on my stocks. It seems like any these decent setups, if you don't overmanage them, most of the time in this market, you're getting bailed out. I'll show you what I mean later with my good trade, bad trade, and stuff like that. But it's just kind of like this market's pretty feisty right now. We need to see like a 4% down day to break the pattern. So until we see like a 3% down day, I'm just gonna keep riding the trend, keep buying these strong earnings names, things like that, and I'm just really keeping it that simple. It's been working really well for me. What are you thinking over there?
Yeah, very similar. You know, with the SPY, like the most recent pivot's gonna be under 460, but same thing you said. A lot of individual names have been setting up, and we've been seeing a lot more follow through in these names where it's like the opposite of what I feel like we were seeing in the beginning of September when we were at highs at that point. But a lot of individual sectors or setups weren't getting the follow through that we were expecting, and there was just kind of that internal weakness that eventually led to a little bit more of a pullback. Where now, you know, I'm looking at like my stocks on the radar, there's like 40 names, and 35 of them are up on the day, and up big. You know, you mentioned like that ON this morning, it's up like 23%. So there's like a lot of these like bigger winners, where like a lot of the names that are down aren't down as much. So it just seems like a lot of the internal stuff is kind of in our favor for that grind up when everyone again is looking for the opposite to happen so they can get back in. So
that's actually a great point. I didn't even really think about that because in September we were at highs and all the chart talks we were talking about, like, I know the market's at highs right now, but you know the internals look terrible. We're not seeing the breakouts, things like that, and now we're seeing them across the board. Yeah, so now it's really when you want to take advantage. You know, until we see that trend break, we'll see it break eventually, but you know, timing it is going to prove rather difficult. As we've seen, we got a decent, a 2% pullback last week, and it immediately got bought up. We're back at all-time highs. So, I mean, just, you know, ride the trend and enjoy it while we got it. That's what I'm doing. It's keeping it very simple as that.
Yeah. Really quick, just three sectors that are still setting up. Again, we have the energy sector that's been just bull flagging very nicely here. You know, the proper spot would be to add up through those highs of 384. And we have financials, same thing, nice little bull flag, you know, at their all-time high, same thing, you'd look to add up through those highs through 101. And then lastly, the telecom sector is, wrong chart, continues to base out here and could look for an entry in some of the telecom names up through like this 146 level. So a couple sectors still setting up. Again, some of the other ones look a little bit more extended, but, you know, again, as long as you just trade and versus those pivots, you can just kind of ride the moves higher. All right, so with that, you want to get into some top ideas?
Yeah, I mean, and we were talking about this before. It's almost difficult now to have fresh ideas because everything's just been going, you know, the past week and change. So I don't have a ton out there I'm staring at. I'll get into what I'm looking at. MTZ to start. So we saw the strong earnings move, the 2-day move off those earnings. Now it's beginning, after it pulled back, gave back half that move, beginning to flag. So I'd be looking for an entry through that like 97.50 area, 98. That area is starting to look pretty good. ANIP. So huge move on earnings, and now it's pretty much retraced the whole move. It's allowed the moving averages to catch up. And if you look at the red days, the past 5 days, yes, they're red days, but you can tell the stock's not really pushing lower anymore. So once this reverses, I definitely want to be involved. 46 is the price point I'm looking at right now. I actually like that one a lot. I think it's going to give a great tight risk entry to the upside. This THC, you know, nice earnings move. Now it's just flagging out, and it's waiting for that flag to develop. You know, turning this all-time high resistance to new support, and eventually wants to push up to that 81.50 area. That one's looking solid. This WELL, I bought this one like 86-ish through those highs. Now it's pulling back. I'm giving it to the low of these earnings, 81. I don't have a huge position at all. But if this one wants to turn back higher, I'll buy that one and just give it to that pivot low wherever it comes in. And I mean, I'll give them, Apple is setting up. I don't really want to buy this right here, but you know you can't deny that it's setting up pretty well right here. A little inside day. You look through it for an entry to that 152 area, looking really solid. You know, you can't knock it. And Google's also setting up again. I'll talk about this one, a good trade, bad trade, for me personally. But this one, you know, market leader, kind of flaggy at highs, strong earnings move. So that one looks good. You can't deny it. But there's not a ton I'm out there trying to be super aggressive on because I feel like it's happened for me in the past, you know, 10 days, 14 days, whatever that may be. So I'm kind of going back to research mode for the most part. What are you thinking?
So a couple of names I'm looking at. Longer term, I know you've been trading this UPS like on a short-term swing. That UPS up through 220, I think in time is, you know, just a very big bull flag has been forming for a couple quarters. So I think up to that 220 in time could be a nice spot. Snap we haven't really spoken about for, you know, since really the earnings gap down, and it's finally started to base out a little bit. I picked up some like a week or two ago, but I didn't really bring it up in the chart just because it was still beaten up for what it was. But again, still starting to base here. It's definitely going to take some time, but up through, you know, in this base, you know, call 50 versus 60, I'll be continuing to look to like pick up some more stock up, you know, near this 50 area to be prepared to that move back up through 60 to kind of fill in that gap. A couple other ones. This BLDR was one Heaven was called out on Monday in the pre-market call. That's still flagging nice. This earnings flag through kind of like that 69 area. That's like right there. Aflac was another one we've been watching for many months. For now, again, 58 is, you know, 57, 58. It's kind of at this spot now, but it's just too extended in the short term to kind of buy 58 versus 53. So this is one just keeping an eye on if it does want to continue to consolidate under that level. Travelers, TRV, another big blue sky breakout that's been setting up. And Lisa actually called this out yesterday. I didn't really see it, you know, the support buy versus that 156. So I kind of missed that support buy. I think she took it, but it still looks great through that 162 in time. A few other earnings names. We have this Sina, you know, nice little earnings flag up here. It's still a little difficult because to buy through that high at 265 versus 240, still a bit wide. So just keeping a close eye on this. Similar with this VECO, a little bit of a cheaper name. But again, same thing. We'll look at, keep an eye on those, you know, those earnings flags. And then wrapping it up, we have this Vive. I took a trade in this up to 290 back in the beginning of October, and it's still just kind of setting up nicely here. Nice little flag versus kind of that 310 area. And keeping an eye on Goldman. If this, you know, up to 420, and then last but not least, Amazon through that 3600. But again, this is for me. I'm just increasing my allocation at M1. This isn't a name that I'm going to try to actively swing and like buy 3600. I'm just going to be taking profits in names like CRM that I've been in for quite some time, and even names like Etsy that are just up a lot that I can take some profits and just put them back to work in a name like Amazon that's been, you know, if you put this like a monthly, it's just a very nice bull flag, you know, for this name. Yeah. So maybe, you know, so kind of, yeah.
That Etsy is sick.
Yeah, Etsy's nuts. Again, I'm not really trying to sell too much of it, but this is one where I can take like a percentage off up here. And again, you know, we started buying this like 170, you know, back in the beginning of summer. So it's up more than 100 points when we were getting in. So now it's just, again, it probably goes higher, but this could be the time to take some profits here and put it back to work into Amazon. That's been, you know, setting up for almost more than a year now in this flag. So that's what I'm looking at. Next, Shake, if you want to go over any good and bad trades, it seems to be next.
For sure, let's do it. So the big winner, there's been a couple big winners, but AMEH. Make sure I got it on the screen all right. All right, AMEH. I pretty much sold out of this one yesterday. I'll explain why. We were talking about, I think we talked about this last week a little bit. Gave us this amazing entry, and this is one where we talked about, we got a lesson from UPST last quarter where it kind of gapped up to resistance. It looks like it got there too quickly, but that's when we learned about earnings power, and we saw what this name did. So I pretty much, it ticked out 131 yesterday, and it was getting just so feisty, and it reminded me of our buddy FLGT last year. You remember this name?
Yeah.
So when it went on this crazy run, I had such a massive position. I was going for my biggest trade of all time, and it was going completely vertical, and I didn't sell out enough, and it was giving us that, like, oh my god move, and then I held it back, and I gave up a lot of profit. So an AMEH made yesterday's move, and I was looking at it from an extended point. You know, when it was trading at 133 yesterday, I looked at the 8-day simple moving average is down at 100, 30% lower. So that's what was like, all right, this is getting a little too feisty. It's going to need to pull back or, you know, digest in some form. So I sold 99% of my stock. I'm holding like a few shares just to, you know, just to see what happens with it. But that was a big winner. This Roblox, we killed this Roblox. Let me get this up. You bet. So what I was saying last week, if we do get a market sell-off, I was screaming this, we were pounding the table on it, if we do get a market sell-off, we have to focus on this Roblox. So we got like that 1 or 2% pulling in the S&P, and Roblox gave up all of its gains. So then the following day, it holds the previous day's low by a penny, and then it reverses higher. So we buy 96.25 when it takes out that intraday high versus 93. So I'm selling 105. I sold some today, 115, 121, and you know, it just looks amazing. And something I've learned in my career, which I'll talk about in the book of the week aspect, is being much more focused on buying pullbacks in the strongest names versus buying fresh breakouts in new names. You know, they already showed us they're strong. Now we're just looking for another entry into these names, and Roblox is just the perfect example of that. CDW. So I bought this one Friday. Looks like I took a loss on it Thursday a little bit. Friday I bought, I lightened up a little bit. I was buying Friday, like right into close. But this is what I was talking about in getting bailed out in the names. So I just bought it, so I had a manageable position. I bought 191 versus 188. It's only $3 risk. And you see now it's just grinding higher up at 195. Looks great. Taking out these recent pivots. Looks like it's just cruised back to these recent 52-week highs around 204. So that's what I'm talking about. If you kind of give the names the right room, you're getting bailed out in this market. CWH, I kind of made a little bit of a mistake in this one, meaning, so I originally bought this inside day right here at 42. And here's what I like about it is it made the huge earnings move. They had great earnings. It pulls into this previous resistance area, kind of turns it to support, and it's allowing us to buy this 42 area. So my mistake in the trade was I added some today, and I just had too much risk on, so I took the ads off, but now it looks great. But, you know, you can't be too mad at when you're managing risk. I got to an uncomfortable point of position where it's like, I bought a lot of stock, and looked down and looked at the risk I kind of had, and I was like, oh, that's way too much for this name. If I took this loss, I'd be mad at myself. So I got out of that stock rather quickly, but it's moving up to the upside. This one looks great on the weekly chart, on the daily chart. I really like that one going forward. Where we at? And then this KMBE. It wasn't a big winner by any means, but it was a lesson learned that really worked out to the upside. So, do you remember Playboy last year? Was that last year? Or was that
the back-to-back secondaries?
The back-to-back secondaries, yeah.
And they traded higher, which still blows my mind.
So it traded higher, and that's what I want to talk about. And it traded higher for a couple days, and then did that second secondary, and the stock sold off, and we lost all our gains. So KNBE announces a secondary offering. I only have a feeler in this name from like 27, and it gaps up that day, and it looks great. It looks strong in the morning, starts to push higher. But I was telling the chat, I'm like, listen, these secondary offerings, I don't care. I'm getting the hell out. So I get out here 29, and then look at the action since then. It sells off 29 to 25, loses $4 very quickly. What's that? 4 divided by 30. I can't do that math right now. 1/7, it's like 14% pull-in or whatever that is. So just avoiding that loss after dealing with that last year, just having that lesson learned. It felt good to take that lesson from last year and use it this year and not deal with pain because of it. So that's really it. And then today I bought this OKTA in the long-term account. This one looks amazing on a long-term basis. Gave us a nice tight risk entry down here. So we bought 262, 263. I'm giving it to this 255 area. And if it wants to break that 270, this thing could be a $300 stock very quickly. So I'm in a lot of things. That's why, you know, things I'm watching wasn't as big as it may normally be. But I'm just going to try to keep taking advantage of this feisty market. What have you been up to over there?
So recently, this morning actually, one of the members, Brandon, called out this IAA, which is, I found it after the order, was a pretty wide name relative to the names that I typically trade. But he called it out. It was, you know, near support, and it just seemed like a very tight setup. You know, a couple inside days, and to get in this thing to pretty much buy above 54 versus 53, like to risk $1, you know, was a very reasonable shot in my opinion. So I just threw a buy stop in. It quickly got filled, and I looked and I saw like the bid-ask spread was like a 50-cent spread in the name, which is not really names that I'm particularly trading quite often. But you know, got in that today. Stop under 53 for now, and I just have, since the name is a little bit wider and a little bit thinner of a name than the ones I'm typically used to trading, I pretty much just have offers like $1 up the whole way up into 61 under the figure. So 54.89, 55.89, 56.89, all to sell in front of those figures. And you know, I'll have to check after this. The high of the day was 55.01. So if my 54.89 order, that would have took me out right in front of that figure for a small portion. And that's just, you know, again, something I've been working on with trying to take profits, and also knowing this name's a little bit wider, that I want to have some offers out there so I can get taken versus having to kind of mark it out. So that one I got in today. I got into this Wayfair with a couple members on, I think it was, yeah, up through 250.
I've been in this Wayfair in my long-term account for like 8 months, and your boy's underwater. So glad to see you're buying it.
Yeah. Well, so I feel like this is a really good example of when we talk about like the crowd that's in the trade, like the people who sell the retest, and it's for someone like yourself that you are like beat up in the name because you've been in it for a while, and you know, you're at a higher cost basis, that you are looking to get out of it, where I'm coming into it like, oh, it's just near support. I can buy up off, you know, first 240, I can risk $10, and now it's up $30 from where or I guess, yeah, $20 from where we're buying. So that's just kind of the different mindsets of when we talk about when the stock's going back to that retest. The people that were in it for the last year or two cannot wait to get out, when the people that are just kind of getting into the name don't have that same time with it, and can be a little more impatient or excited to get out of it.
Yeah.
So yeah, so again, just started that. You know, I moved the stop up originally, was under this 240. Was giving me about 10 points, and then we got that little inside day yesterday and we traded up higher. So now I can say, look, I bought 250. Clearly now, if this name reverses tomorrow, the next day, and is trading below its low day and takes that 250, I'm more likely to be wrong in this trade, but I'll be wrong and I will walk away with pretty much the same amount of money that I started the trade with. So now that the stop's break even. The main lesson for me was really from last week, was with this MDB and STX. And the main lesson for me this past month really has been not anticipating the dojis at highs, and more so reacting to the follow day's price action. And that was something that, like, I, you know, even with the market getting back to the prior all-time highs earlier end of October, I kind of prematurely took profits too quickly in a lot of names as the market went higher. And this MDB was a good example of it. Was when we saw this doji at highs here, I want to see what happens the next day. If the next day the stock trades higher, I want to keep it and have a stop first at low. If it trades lower and it's taking out that low of day, I'm looking to exit. So for MDB, the next day it traded lower, it pushed me out. You know, it was a solid, 8 or 9% trade in, 4 or 5 days, very easy swing. So, was very happy with that trade. And again, now it shook out and still looking fine. But for me, it was a very easy trade. The big mistake for me was with STX. And there's a couple of guys that were in it with myself as well. And it was just a very easy earnings flag breakout that we took. We pretty much bought it through 90, and we just trailed the stop versus the prior low a day the entire way up. And for the better part of a week, it worked perfectly. Every day, towards the close, we just kept moving the stop up, verse 92, verse 94, verse 96, so on and so forth. But the day where I made the mistake was on November 10th, when we had this little doji at highs. This was where the mistake was. Where I anticipated there were, and this was the worst, is like the difference of like 1%, like not wanting to get back that 1%. So at that, like this day, stop was prior low a day that under 97, low a day is 98. And I'm like, look, I'm in this thing for almost 10 days. It's traded up 10 days in a row. Like, how much more can I expect from this stock? There's no way that it's going to trade higher given given what I'm seeing right now. So, okay, and let me just take the gain here. Let me take the 10% versus giving it back for 8%. And then immediately the next day, 6% higher, feel like an idiot. Next day, again, up another 6-7%. And it was an easy 30% trade. And this was kind of similar with, like you mentioned, where you took profits and like the 130s. That almost like capitulation where like looking at it, you're like, I'm like, what an idiot. Like I gave it away for 10% when it went for 30. And that was that simple mistake that I just anticipated a reversal and just if I wait to the next, it'll just the open. The stock opens kind of inside day, trades higher. Okay, I move the stop under 98 and I'm still in the trade. So that was like the real big kind of like punch in the gut on this lesson of like really hammering it in. When we start to see those dojis at highs, just see what the next day's price action is. If it trades higher, keep it. If it trades lower, kind of look for the exit. And that was a 20% difference of this trade. So that's definitely my biggest lesson and one that will definitely be burned in my head for the next couple of weeks.
Yeah, it's tough right there.
Yeah, but lesson learned. So anyways, that's all I got. We can move on to book of the week.
Yeah, so like I was saying before, I've been reading this Momentum Masters. It's just kind of a roundtable interview style book with the guys from like Market Wizards and things like that. And I was just reading it earlier today. I found it really interesting. These guys, and it's like, when you read something, it's like, oh shit, I've been doing that and like didn't even realize it. I think back to our prop days, and we would just be new breakout, new breakout, new breakout. What new breakout can I buy? Instead of just trying to find the strongest stocks and finding entries with those. And what these guys were all talking about was the biggest transformation they saw in their trading was when they focused on the strongest names in the market versus trying to buy every new breakout. And you look at that Roblox trade that I had, and it's just like a perfect example where it's like, I would have normally been like, all right, I missed that move, on to the next thing. No, now it's all right. If the market pulls back, I want to buy A, B, C, and D, and focusing on those names has just transformed my P&L to a much more profitable standpoint. So it was interesting to see that these guys saying they're trading completely transformed from trying to buy every new breakout to buying pullbacks and looking for secondary entries in the best names already. So I still got some to go in this, but it was good to see that. What are you reading over there?
All right, so I got two. I got a good and a bad. Bad is going to be the mystery of banking. This is just, it's one of those books. I felt like I was back in college, like reading the textbook where it's all perfect world scenarios and nothing really pertains to anything that's like.
That's my biggest pet peeve. That's my biggest pet peeve about trading books. Everything's a perfect world scenario. It's not.
So this book was basically all of that, and the whole premise of the book is, the guy's theory is you have to get rid of the Fed. And I understand some of the points, but it's just like one of those, if I, in a perfect world, I would do this, this, and this, but it would never, like, he wanted to go back to the gold standard, and it was just like, you would blow up every type of economy and business if you pulled all the money back that the Fed printed and then went back to, it was just, it just like was very painful.
So hypothetical,
it's like you could never do it. It's like, we're here where we're here. Yes, the mistakes were made, but we can't go back to the Stone Age because, but anyways, book sucked. Please don't read it. Book that I really like is this Black Box Thinking. A lot of really good stories. Like if, you've definitely watched the show Scared Straight, when they bring like the teenagers to the prisons and they,
it's the best meme of all time.
Yeah. But that, they've been doing that since like one of the chapters, they've been doing this since the 80s. They praised it as like this like highly, reformative juvenile program. But the problem was that the way that it was like gauged was they would send out these questionnaires to the parents of the children who went on this program, and they'd always get these glowing reviews. But then the problem was the fact for the students or the kids who went, who the parents didn't send back the report, they weren't really accounted in that review.
Yeah, skewed data.
Yeah, so it was like all the data would say 90% of children or juveniles who went to this didn't repeat the crimes and this and that, but it was only because the small sample set of people who actually replied to it were replying back positively. They weren't going out of the way to reply back saying, like kids still, a derelict. And when they looked later and they looked back over, a 30-year period, they found that a lot of these people ended up emulating similar crimes that they were like, it was just crazy. I can't really articulate it in a one or two sentence example, but they like debunk how the scare trade was actually worse off for the kids than just not doing anything at all.
Right.
And they go on to compare more so even with us with trading, with how we look at mistakes that we make and ways to improve on them. One of the big things, they compare the difference between how airline pilots look at mistakes and failures compared to how the medical profession and doctors and hospitals do. And it just goes in this like crazy rabbit hole of, why, pilots are open to admit to mistakes. They're looking to, find those flaws because it's in their own best interest. You don't want to be a pilot and crash your plane. You're going to die. Where on the doctor's side, they're almost incentivized to hide the mistakes just for their own benefit, just because doctors get sued left and right. And they typically push blame away on, it was the patient had a complication we weren't expecting. So they do like a good job at shifting the blame, but as a result from that, they don't find simple solutions to, help just some of these bigger causes. And they go into like a lot of little things that are just very eye-opening. But anyways, very good book. Highly recommend. A couple little trading stuff in here that they sprinkle in that, again, it's not really a trading book, but they mention the stock market and stuff like that. So this was definitely a very, very fun read, for sure.
All right, well, good stuff. Well, folks, that's all we got. Chart Talk 105 in the books. Give us a little like, subscribe, some questions, whatever you want to do. Until next week, folks. See you then.